Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuning into Traders Nation. My pleasure to have back with us once again Jeff Small. He's president of Arbor Financial and author of Turning Financial Planning Right Side Up. Jeff, welcome back to Traders Nation. How are you today?
Hey, Kurt, it's great to be here. Thank you for having me.
Yeah, as always, Jeff, as always. Listen, so since the Great Recession, Jeff, you know, there was a lot of new home builds that are going on. We're seeing that today. I drive around Phoenix, and I love it. I see a lot of wood going up, right? But the home improvement section, people doing home improvements in their own homes, generally travel over to Home Depot or Lowe's. Have these two retailers done well since the recovery?
Well, you know, we saw consumer spending really fall off last quarter, Kurt, for a number of reasons. I think the stock market kind of put everybody in a downward mode for spending because we had a 20% correction in the last quarter of last year.
Right.
And, you know, the Lowe's and Home Depot, they're not going to be impenetrable from that fact.
Right.
And so they underperformed. But what happened was Lowe's got rewarded when they underperformed on their numbers because their comp sales improved dramatically, and they're narrowing the gap between Lowe's and Home Depot's comp sales. And so Home Depot didn't get rewarded because they missed their market revenues, but by a hair. So what we have now is a declining macro data environment, and then we're going to start to see it affect the numbers and the bottom lines of these big companies like Home Depot.
You know, it's it's interesting with the consumer spending, certainly, and I think some people are thinking twice, not even in the market with the correction of 20% of the market, but they're also are they thinking twice about putting any amount of a lot of money into doing home remodels and things of that nature. I mean, and if they're doing it, are they thinking, well, maybe instead of spending $3 a foot on some flooring, maybe we better go with the $270 or $250 or $2.25 foot. So maybe they're spending. It's a two-part question. So are they? Maybe they're spending it, but maybe a little bit less, or are they even spending it at all?
They're just not spending, and with the slowdown in real estate, Kurt, and you know, there's not as many resales now because prices have peaked. People don't want to buy. Mm-hmm. It's really the flipping and the investing in real estate is dramatically declining because prices are at a peak, and it's getting harder and harder to find good properties to roll and make money off of. So that's going to hurt the revenue, the sales, the remodeling component, the home restoration side of you know, Lowe's and Home Depot. Even though it's kind of a do-it-yourself place, it's a great place to go.
Yeah, yeah. What about home valuations then? So that all ties into it. Is that slowing also? Because certainly you're not going to put $12,000 kitchen in or $20,000 kitchen in if you're not going to get it out over 15, 20-year period of time.
Well, what we're seeing in the real estate side is that, you know, over $750,000 houses and up are really getting beaten up very badly. They sometimes have to be dropped 10 to 15% in price.
Sure.
Just to sell them. But the middle market, the average $200,000 to $400,000 house, we're still seeing a little bit of tail off there as well, but not as much as the bigger houses, and that's going to impact, you know, of course, the amount of money people spend. Yeah.
So as far as the housing industry goes, in median, what are we looking at? 3-4% increase, if that, or maybe higher? Over time?
Well, you know, there are some optimists out there, some prognosticators in real estate that think that the millennials are going to come in and fill the gap.
Okay.
I think the millennials would rather rent and stay in the major metropolitan areas.
Sure.
So I don't think the millennials are going to come in there and reboost the home market. But I think we're going to see home sales not even eclipse 5 million units this year. I think we're going to be 4.6 to 4.8 is my prediction.
Yeah.
And so, you know, what is that? A 3 to 4% decline.
Right. Okay. All right. So let's go back to Home Depot and Lowe's because it makes you wonder. Sometimes I look at Lowe's and I go through the parking lots and I see more people in Home Depot than I do see in Lowe's, but that's just in my area. That doesn't mean that's not scientific at all. But is there enough space? Is there enough business to support both of these, Lowe's and Home Depot? I mean, there's not like there's really a third, right? I mean, it's almost like Costco and Sam's Club, and that's it, right?
That's correct. And so, I mean, you certainly can't remodel your house from Amazon, that's for sure.
No, but people probably would try, though, Jeff, if they could.
Well, you know, people use Amazon for the cheapest thing they can get because Amazon sells everything at bottom basement prices, but I never see Amazon competing with Lowe's and Home Depot. I think bricks will be clicks every time because people want to physically touch and feel what they're getting.
Sure.
And with Lowe's and Home Depot having so many different contractors on deck, you know, for kitchens, for carpets, for tile, for, you know, appliances, everything else, the whole shebang, so even plumbing.
Sure.
So.
And you're absolutely right, because people want to pick up that tile, don't they? I mean, you can buy socks. Socks are socks. You know what you're going to get. But with that tile, you got to look at the sheen. You got to look at the texture. You got to look at the lot color. So people want to go in and see that. They're not going to be able to get that kind of close-up visual on Amazon. So that's interesting.
Yeah, it's a tangible purchase, no doubt.
Yeah, okay. So what are investors looking at as far as these two, the Home Depot and Lowe's, short-term and then maybe even long-term, Jeff?
Well, I think, the macro data for employment is really strong. Wages increases are still very strong. And so as long as that data looks good, I think you can expect moderate pricing point increases in the stock prices of these companies, and their revenue should pick up because home spending will pick up after March. Because there is a seasonal event here. We had a horrible winter, one of the worst winters on record, that obviously affected their numbers. And so we'll see spending pick up. So, I mean, if you're an investor, I don't see a lot of upside in Home Depot and Lowe's stock at this point.
Yeah.
I don't think the technical data, really the demand is going to be there unless their numbers really come about and they start, increasing at 3 to 4% quarter over quarter.
Yeah, and as far as long-term is concerned, same thing there?
It really is. It's the same thing because they're at the top end of their all-time stock prices.
Yeah.
I would favor Lowe's a little bit more than Home Depot at this stage of the cycle, and the reason for that is because Lowe's has significantly more room for improvement on their comp sales per store. They're catching up to Home Depot. Their CEO is from Home Depot, so I think he's going to reform things, and he's put things in place that will dramatically improve the potential for revenue extraction from their model.
All right, let's go on to housing in general. So is there anything else in housing that investors and traders should be looking at when it comes to maybe a long-term investments?
That's a funny question. Yeah. There is nothing I like to own in the housing market at this stage of the cycle.
Nice.
Absolutely. I might be wrong, Kurt, because the best part of the credit sector of our economy is the home cycle, is the home mortgage business. There is no foreclosures are dropping. We're not going to see a huge correction in real estate. We might see a pricing point fall off of 10 to 15 points in market values, but we're not going to see a correction like we did post 2008 and 2009.
Okay, so you're staying out of the housing for the most part in general, right? I mean, completely out of it.
I really am. At this stage of the cycle, I prefer the FANG stocks. Okay. I made that call the end of December, and also banks.
Okay, and banks also. Okay, healthcare. Anything in that particular area that you may like or look at?
Healthcare is so politically sensitive at this stage, and, we are living in a very divisive time politically.
Yeah.
The healthcare stocks are, again, at all-time highs, and with them peaking, I can't say that I would want to go long at this stage in a politically unstable environment that we have.
Is there anything other than healthcare that you may deem more politically as a hot potato, a sector in the domestically?
That's so funny you're asking that.
Yeah, that we may want to just stay away from?
Well, I wouldn't stay away from pot stocks.
Okay.
I'm a contrarian there. I wouldn't. I think that I think we're going to see marijuana legal.
Okay.
And I think it's going to happen in the next 24 to 36 months. If the Congress goes blue, if we have a new administration, I think we're going to see marijuana legal, and that will be a ginormous boost for pot stocks. And I think that's going to be the new internet. Wave of potential appreciation in the marketplace. That's going to be the new bastion of, which companies are going to explode on the scene with great growth numbers. And of course, CGC is the perennial canopy growth from Canada.
Yeah.
That's the company the Constellation Brands gave $3 billion to own 40% of.
Sure.
So.
Yeah, that's a huge investment. It is. And you know what? And it is, I mean, who's going to backfill that market? I mean, people are poised to do that. We're out of time. Hey, Jeff, where can we find you? You got a website?
I do. Arbor-financial.com. Arbor like the tree, ARBOR. You can subscribe to my newsletter and see all my media appearances. And
head on over there today. Plus, pick up a copy of Turning Financial Planning Right Side Up. Jeff Small's here today with us. Jeff, as always, we appreciate your time.
Thank you, Kurt.
You bet. Have a great day. We'll be right back.